Welcome to EPK Capital's YouTube channel. In this section, we provide an in-depth financial analysis. Today, we delve into UltraTech Cement's performance over the past decade. Our objective is to assess its valuation through the lens of Benjamin Graham's security analysis principles. This comprehensive review is designed for investors, analysts, and students. We aim to provide a data-driven perspective on one of India's leading industrial giants. UltraTech Cement has demonstrated consistent growth throughout the last 10 years. This sustained expansion reflects the robust demand for cement across India. The company's trajectory is deeply intertwined with India's burgeoning infrastructure economy. Its performance has significantly benefited from various government initiatives. Urbanization trends and a thriving construction sector have also been key drivers. These factors collectively underscore a favorable operating environment. When examining UltraTech's financial health, several key metrics stand out. We consider revenue growth as a primary indicator of market penetration. Profitability margins, specifically EBITDA and net profit, reveal operational efficiency. Debt levels are also crucial for assessing financial stability and risk. Indicators of a healthy trend include consistently increasing revenue. Stable or improving margins signal effective cost management. Manageable debt levels are essential for long-term sustainability. Our analysis of historical financial statements seeks consistent positive trends. We particularly focus on revenue expansion and earnings per share, or EPS, growth. It is also important to investigate any significant dips or periods of volatility. Understanding these fluctuations provides context for past performance. This historical perspective is vital for projecting future potential. UltraTech's performance is shaped by several critical factors. Market dynamics play a significant role in its operational landscape. We analyze the competitive environment within the Indian cement industry. This includes assessing other major cement players and their respective market shares. Understanding the competitive intensity helps gauge pricing power and market positioning. Input costs represent another major influence on profitability. Fluctuations in raw material prices such as limestone and coal directly impact expenses. Energy costs also exert considerable pressure on the company's bottom line. UltraTech's ability to manage these costs is paramount. This involves efficient operational strategies and astute pricing adjustments. Effective cost control is a hallmark of a resilient business. Capacity expansion is crucial for meeting India's growing demand for cement. We evaluate the company's capital expenditure plans. These investments are vital for future growth and market dominance. Strategic expansions ensure UltraTech can capitalize on emerging opportunities. Geographic diversification further strengthens UltraTech's market position. Its presence across various regions of India helps mitigate risks. This broad footprint reduces vulnerability to regional economic fluctuations. A diversified presence provides stability and consistent demand. Now we apply Benjamin Graham's valuation principles from security analysis. This framework helps us determine if UltraTech Cement is undervalued, overvalued, or fairly priced. Graham's methodology emphasizes a disciplined, fundamental approach to investing. The intrinsic value calculation is central to this assessment. We estimate this value based on the company's earnings, book value, and dividend history. A thorough analysis of historical financial data forms the foundation of this calculation. We also project future earnings growth, considering industry trends and company-specific factors. This projection is critical for a forward-looking valuation. The margin of safety principle is a cornerstone of Graham's philosophy. It emphasizes buying stocks significantly below their calculated intrinsic value. This provides a buffer against unforeseen market downturns or business challenges. We compare UltraTech's current market price with our calculated intrinsic value. The goal is to determine if a sufficient margin of safety exists for potential investors. A wide margin of safety is indicative of a sound investment. Beyond quantitative analysis, Graham also stressed qualitative factors. These elements provide crucial context to the numbers. Management quality is paramount, reflecting leadership, integrity, and strategic vision. Competitive advantages, or economic moats, ensure sustainable profitability. These could include brand strength, cost leadership, or distribution networks. The overall industry outlook also influences long-term prospects. Strong management and sustainable competitive advantages can support a higher valuation. These qualitative aspects provide confidence in the company's future performance. They are integral to a holistic investment decision. Based on our comprehensive analysis, we can now draw a conclusion regarding UltraTech Cement's valuation. Applying Benjamin Graham's principles, we assess whether the stock appears undervalued, overvalued, or fairly valued. This assessment integrates both quantitative metrics and qualitative insights. UltraTech's consistent growth and strategic positioning are notable. Its strong market presence and capacity expansion plans are positive indicators. The company's ability to manage input costs also contributes to its resilience. However, investors must consider key risks. These include potential volatility in raw material prices and energy costs. Economic slowdowns or changes in government infrastructure spending could also impact demand. Conversely, significant opportunities exist for UltraTech. Continued urbanization and government focus on infrastructure development present tailwinds. The company's strong balance sheet and operational efficiency position it well for future growth. Our data-driven conclusion incorporates both the numerical analysis and the qualitative factors. We emphasize the importance of a margin of safety in any investment decision. This provides a protective buffer against market uncertainties. For potential investors, UltraTech Cement presents a compelling case for further due diligence. A thorough understanding of its fundamentals, market dynamics, and Graham's principles is essential. This comprehensive assessment aims to empower informed investment choices. Thank you for watching it till the end. For more such videos, like and share this videos with people you know, and subscribe to EPK Capital channel.